Good day, all. Ira Epstein of Linn Associates with your metal market wrap-up. And this wrap-up is for the evening of Thursday, and we are now sitting here on the 18th of November, 2021, getting on to 5:10 in the afternoon. That's p.m. Central Time. Another up day in the stock indices early on. You did set some records today. There's so many naysayers out there. The market's peaking, it's not going to go. I see it all the time. I'm the opposite. And the reason I'm the opposite is I look at seasonals, I look at what takes place at this time of year in a lot of markets, and you typically get a surge to the upside. Will that be lost on the metals? Well, first, I've made a switch for you. We're now looking at Feb gold, March silver, March copper. That's very important. Second, dollar today was down, and yet metals were lower in the silver and the gold. So that was fascinating to watch. The energy market's slipping a bit. China did release some oil from the reserves. I don't know that President Biden should do anything with it. He's missed the window. I don't know where this man sleeps, but he's missed the window. He's sleeping all the time, apparently. If you release the oil now, it's not going to do anything for the Thanksgiving traffic. So you tell me you want to do it for Christmas? I don't know. I don't know what he does, so I can't figure it out. When you look at the weekly chart of gold, it's going to be the Dees Gold is the lead month right now, so I just got it up there like that. You can see how the market's slipping back. For the week, we're down 0.41%, just shy of a half a percentage point, down about $7.50. When you go to Feb Gold, you have a distribution pattern. You could get a correction down from that. You never know. You got to wait and see which way it wants to bounce away from this. But when we put the swing line on, we do see we have a pattern of higher lows and higher highs. So it is still bullish. The next thing I look at are moving averages. The 18-day moving averages here, about the 1830 level. And there's an event taking place that I've warned you about, and you're seeing it develop in the Feb Gold now, where we're getting ready, could happen by Monday, where the 100-day average gets over the 200-day average, another bullish crossover, which would then give you the short-term average, the 18-day over the 100, the 100 over the 200, a classic bull setup. When I look at where the market's at in terms of next, the Bollinger Band, you had been running the band. You've moved sideways away from it, very typical. That does not mean that you're not still strong. You are. And what you measure it with is the strength of the slow stochastic. Until this number closes under 79, I think these pullbacks in the market, even if you take out these swing lines, don't mean anything. This will rule the day. As long as it stays over there, I think the pros buy, and they're looking for approximately that 1900 level. When we get to the gold-silver ratio, it's Feb gold now versus March silver. So it's a little different, and you've got yourself back up at the 18-day average of close differential. In the March silver, you're losing the ability to hold an embedded reading. Now follow me on this. Let's go back. Both numbers yesterday, Thursday's close. It's really today, but you're already in the Friday trade. Both were over 80. Day before, come on, were over 80, and the day before you were over 80. So tonight, you're starting to lose that reading. Don't get what's called stochasticitis. Let the market either prove it can stay under it or not. It's certainly a warning sign not to be a buyer. That much. Absolutely. That's what you're hearing me say. Could you pull back into this 18-day average and 100-day average to try to figure out as a chart what to do next? I can see that. What stopped the rally? The combination of the upper Bollinger Band and the 200-day average. In the copper market, now we're in March. You've got a higher high, lower low. You went down, challenged the lower Bollinger Band 2 days ago. Today, bounced away from it, and tonight, just sort of hanging here. But you have resistance at the 432.60 level, the 100-day average, to the 18-day average of 434.96, but you're not in a trend. You're doing this. That's what the market is now doing. This, as I pointed out to you, these highs, I don't know that you're going back to those highs. You've settled strike issues in Chile and Peru. They're getting more money at the mines. They're producing more copper at this point in time. That's not how you create a market to go back up here. You'll say, what about demand? Well, COVID's getting worse, not better. So I don't see demand in factories just magically picking up as more and more people in Europe and Asia are getting ill. You know, we're going to get in a worse case even in America as these 54 million Americans hit the road. They're going to be like petri dishes. They're going to be, let me bring my germs to your house, those little kids that come in. You know, it's just the way it is. I'm going to have those kids at my house, so you know I'm kidding with you, but I'm so serious about it. My friends and I always laugh. We go, yeah, here come the kids, and here comes the colds, and everything else we'll get with it. When you come over to the platinum market, well, this is where the market ran into resistance. It's crystal clear. I mean, if you don't see this, you're not much of a chartist. You're up to the upper band, you're overbought, and now you're looking to see what happens. And with that reversal, well, that's setting the stage up for a possible retest of the 18-day average of closes. Kaboom. I mean, if you don't get Charting 101, take my charting course. Spend some of your holiday time coming up. Go to our website, look at the charting course. It's inexpensive, 50 hours of videos. I will change the way that you look at a chart. And then from there, you build your own techniques with it. In the palladium market, I've moved to the March. And now you're fighting this. This is where I was looking for the resistance. It's going to be up here somewhere, a reversal day. To get another leg up, you got to take out these highs. I think it's easier for the market now with momentum, overbought, correcting. You can get a deeper break in the market. Doesn't mean the party's over, though. In the dollar index, what an easy call. Market was over the upper Bollinger Band. To get back under it was the easy part. But you haven't lost the uptrend. In order to lose it, you got to get a reading on Friday under 79 in the slow stochastic. Do that, and then I'll say, okay, more of a correction. Maybe we'll go back to that 18-day average of closes, and this rally ended. By the way, that would be friendly gold also, right? So a lot of things you got to think about here. But that's what we try to help you with. With what we do at Linn, we try to give you our full program of teaching you about markets. We cover daily with many different news stories. All these markets, they're emailed to you. I want to put them in your mailbox, your email box, free. Take a look at what commodity traders have to say about this, and a lot of us are tech-oriented here. How do you get it? Just go to our website under free offers. You can also do the unimaginable call, and we'll get you set up. But don't tell anybody about that. I'm Ira Epstein. You have a good day. I'll see you tomorrow.